Hello all, welcome to the second weekly trade recap. Forgive me for the video quality, I'm away from home, so this is gonna be it for a while. Heading to the video now. So last week took 5 trades, all 5 trades took break even or stop losses. This week it's a bit better. The opening balance of the account was 58,091 and the current balance is 62,022 week. Coming to the trades, took an overall of 7 trades, of which 4 of them are the same exact ones. There were a couple of errors that I made within the trade execution, so I had to re-enter and get that risk reward. I'll be telling you how it happened, all of it now. So the first trade is gold. The overall trend in gold was pretty bearish in shorter time frame. In 15 minutes, it was making lower highs and lower lows. The logic was that it was creating lower highs and lower lows and created a solid liquidity in 1 hour, which looked to be taken out. There's the liquidity that was created in the 1 hour, and I was rooting for this liquidity to be taken out since the trend was bearish, and it created an order block in 15 minutes and with a liquidity, and it was swept and the order block was taken and a bounce was created to the downside, and I was expecting a retracement towards the fair value gap which was created in 5 minutes, and my first trade execution was right there. It was at the fair value gap with the stop loss being right above this liquidity point, which took stop loss because I did assess the position of the stop loss a bit wrong, because usually my trade execution is based on Fibonacci. I rarely make it completely dependent on a fair value gap because it's a little unreliable. This seemed like it's coming under the zone of 0.618 to 0.7, and that's the reason I got in here. And my usual stop placement will be right above the previous highs or lows, but I didn't do that here because I did keep my stop losses right at some inducement, and that's why I was taken out. So what I did is that I re-entered again here with the same risk. Over there I lost around $450, and over here again I entered with the same risk. I didn't keep it to the top because since I wasn't able to enter at the point I wanted, I did enter based on 0.7, but still this was the level where my stop criteria met of my risk, which is $450. And from there, the price did tank to take this liquidity out. And the overall risk reward for this trade is around 1:2.45. The logic is very simple. Created an order block with a liquidity sweep, did a liquidity sweep, touched the order block, came for the retracement back, and directly went to the lower liquidities. The next one is US 100. Straightforward trade. The overall market trend was sideways in shorter time frame. In higher time frames, it was obviously bullish, but in shorter time frames, it has been going sideways for a bit now, at least for the past week and a half. It was basically the logic for creating this trade was it was creating a head and shoulder pattern within the 15 minutes, and it did create an order block in 1 hour after taking a liquidity sweep during London. So my idea was that this is going to retrace back to the 0.11 fib level and 0.7 fib level before it's about to tank straight from there. And I did enter that. What I didn't analyze properly was that it was FOMC. FOMC was at 11:30 p.m. IST, and I didn't account that as a factor in. Since I'm trading with prop firms, I still have to adhere to certain rules and certain restrictions that I'm put forward with. So news is one of them. I can't be trading 2 minutes before and 2 minutes after the news. And what I did is that when all these volatility you are seeing here, when this happened, I did move my stop to break even when the price was going down a little bit. And I did get taken out at break even during FOMC itself. So I knew the bias, it's obviously going to go down because it was creating a very clear head and shoulder with 2 liquidity points below. For more context, let's get to the chart itself. So if you can see this is a very clean head and shoulder that is being created. And the price we are observing is right here. This is the order block that has been created with a liquidity point. I did enter somewhere around here itself. The price did go down, came back, came down. This spike you're seeing in this 1 hour candle is the FOMC. And this is what took me out. And it did create decent structure right after it took me out. Just a second. Yeah, it did create a very good structure. This was a decent rejection that we got, and my entry was as soon as it gave the rejection. I couldn't enter until 2 minutes after the news, so I entered somewhere around 11:33, and I kept my risk right above these FOMC highs, and it did eventually go down to our targets. Yeah, this is a trade. Entered here, went down smooth to the targets, got a 1:3.87 RR in this. The error in the previous execution was that I didn't account the FOMC into it, but yeah, that's basically I didn't want to. I could have just kept the stop loss wherever I had the stop loss before, but then I'm just eating up too much risk there. FOMC could just spike the price, take my stop loss, and just head down, so that I can just keep it at break even. I don't mind, taking a break even rather than completely taking a loss in a trade. But market was favorable during that point, and we did re-enter and got the full extent of the move. The very first couple of trades of the week were Bitcoin, and this happened during last, I guess, Friday and Saturday. So the first entry in Bitcoin was that this was a bounce from a daily fair value gap, and it did create an inverted fair value gap in 4 hours because it did create a market shift here. And I was expecting for the market to again come back to this point of interest, which is the inverted fair value gap, and to bounce back. And my entry was right here. This is a 4 hours chart, and my entry was in 4 hours, and I was holding the trade until it started reversing too much. And that was a point of time I decided, I just cut the losses. When I was at 1:1, I was also giving too much money away on swap fees. I was up 1:1, but my entire PNL was down by 550, by $50. My entire profit was around 550 because $50 went for swap itself. So I didn't want to hold that much longer. There was no error in this trade. It's a perfect execution. Very basic trade, straightforward, higher time frame. So conviction is higher. 4-hour reversal from the inverted fair value gap, and directly it went to the next liquidity point before it reversed. My assumption was that it's gonna go to these highs, but they always get surprised, and it did get reversed. So at least we got a 1:1. And during that structure being formed, we got another trade in Bitcoin, which is in 15 minutes. So this was an order block bounce. Once that clear drop towards inverted fair value gap was over, it started creating great bullish structure. And this is an order block that you're seeing here. And the price did come, take out this liquidity, took the order block, went up. Now the price was bound to come back to either a Fibonacci retracement or this order block here. I did go for the Fibonacci 0.618 because Bitcoin seems to work well with 0.618 to 0.7. And this was the trade with Bitcoin. It did go to our targets of 1:3. Very neat, very simple structure, textbook structure. We will see a lot of these happening here and there. Even in Nifty, this exact similar structure happened in 1 hour time frame, and I think it was last month. And this keeps happening. Wow. And there's a very high probability A plus structure. I didn't risk the complete 1% because I did lose 3% in the last week. I need to get my psychology back on track before I start risking more. So I just kept my risk at 0.75 so that I don't panic or do anything stupid while I'm holding the trade. The next one was I just want to play around with this trade. The obvious structure for GBP was bullish, and in shorter time frames, obviously it was a bearish structure because it was creating lower highs and lower lows. Because last week Euro and GBP completely got demolished, and this is kind of the consolidation that was happening there. And you see these liquidity points. It was a good liquidity points in 15 minutes and 1 hour. It got taken out. My trade was planned when I saw this displacement towards the downside. And this gave me good confirmation that it might just give me a couple of hours before it again shoots up. But obviously it was a counter trend trade, and it did hold its own level of its risk associated with that. And yeah, I did enter at 0.7. I did risk only 0.5%, which is $300. And once the trade was showing a little of a lower structure, for low and lower high structure within 1 minute and 2 minute time frames, I started trailing it aggressively. And it did take my trailing SL, where I lost around $260 or $225, I guess. And obviously the structure did play out, but these things happen when you're counter trading and you just can't help it. The logic was that this is going to come to these liquidity points, take out this strong liquidity, and then move from there. But so these are the trades for the week, and this is the MT. The overall balance is 62,022 as of now. Nasdaq did good, and XAU did good. Bitcoin too did good. So one lesson to take out from this is that last week was a total mess up. Lost around 3% in 5 trades, and this week has been a total turnaround in just, I did take stop losses in this week too, but I'm still way ahead on where I was last week because of my risk management and the RRs about I was able to take out this week. So if you can keep your risk management in place and if you can know when and where to control your risk, if you start thinking in a way that rather than how much you will gain and start thinking about how much you will lose if this goes wrong, you will be put way ahead of your own psychology, and you'll be at a place where you'll be able to execute with so much more conviction. And even after a great entry, you will be able to hold your trades with good conviction and good psyche throughout until you reach your take profits. And that is the power of good risk management. And I would always recommend you risk a little bit lower than your actual appetite. In that way, you are able to stay level headed throughout the game. And that is it for the week. So see you guys during next week. Peace out.